all through the last 12 or 18 months since BloombergQuint has been on air, we've been speaking about how people should be investing in mutual funds in a gradual fashion. 2018 will perhaps be remembered as the year when the mutual fund industry faced one of the biggest challenges, and of course, and with the redemptions spiking across all of the board, a fallout of the liquidity concern and some of the exposure to stretch housing finance companies as well. But then there have been some which have managed to weather the storm better. Yash Upadhyaya has drawn up a list of the mutual funds and the schemes which have given the highest returns in their respective categories. Yash, firstly, how did you shortlist these funds?
So basically what we've done is that we've excluded any or all sector or thematic funds as well as funds which are focused outside India. So these are purely India focused equity funds. Now, as you rightly mentioned, it was a difficult year for equity mutual funds, and it would have been much worse had it not been for the strong participation of the retail investors, which showed in the form of consistent SIP growth. I say this because not a single fund in its respective market cap category managed to give double-digit returns on a year-to-date basis. Let's start with the large cap funds, and Axis Blue Chip Fund that stands out. Its direct plan that has given a year-to-date return of 7.2%. Let's also take a look at which are the top 5 holdings and how they have performed. So HDFC Bank, Kotak Mahindra Bank, Bajaj Finance, Maruti Suzuki, they all have a weightage of more than 5% in its overall portfolio. Now, one name that stands out for me, Neeraj, is Maruti Suzuki, because that's the only name in this list which has given a negative year-to-date return, and in fact Maruti is down more than 20%. So that has been one which has impacted the performance of Axis Blue Chip Fund. As far as the mid-cap fund is concerned, again it's the Axis mid-cap fund which has stood out. So 3.4% return on a year-to-date basis. Their top holdings, they include the likes of City Union Bank, Group Finance, HDFC Bank, so a higher weightage of the financials. Page Industries is there as well. So a couple of names of which have done fairly well, but Page Industries, again, despite having a phenomenal run, it is down about 7% on a year-to-date basis. HDFC Bank is up about 11%, and City Union Bank, that too has done well for itself. As far as the small cap fund is concerned, the HDFC small and mid cap fund has been the top performer, but the key point to note here is that despite being the top performer, it has not been able to give positive returns. So on a year-to-date basis, the fund is down close to 7%. Some of its top holdings, they include the likes of Aurobindo Pharma, NIT Tech, that has been a top performer, 73% return on a year-to-date basis. But what's not done well are the likes of Sharda Cropchem, which is down about 30%. Jumble Fertilizers are down anywhere between 5.5%, and relative underperformance coming in from Aurobindo Pharma and Sonata Software, who are just marginally in the green. The last category to watch out for is the multi-cap category, and again is the Axis multi-cap fund. It's more or less a replica of the large cap fund. It has given a similar return as well, 8% up on a year-to-date basis. Its top holdings almost mirroring that of the large cap fund. The key name again stands out to be Maruti Suzuki, which is down more than 20% on a year-to-date basis.